McDonald's has been hit by its first fall in global sales since the start of the pandemic in 2020.
The lunchtime rush at McDonald's. But these days, the cost of burgers and fries is forcing some diners to watch their wallets.
Expensive. I don't even buy it, I just buy coffee.
Anybody can afford coffee at $1. I would think so anyway.
With more than 60% of Canadians struggling with the rising cost of living, according to a 2025 financial stress index, a well-known fast food chain is making a clear promise to Canadians with a price freeze on certain menu items.
Breaking tonight, inflation is still rising, but in Canada, fast food prices just stopped moving, and America has no way to copy this move. While consumers across the United States continue to see menu boards climb higher every month, something unusual just happened north of the border. McDonald's Canada didn't adjust prices, didn't introduce temporary discounts, didn't quietly shrink portion sizes. It froze prices entirely, and the timing wasn't accidental. For months, analysts assumed Canada would follow the same inflation path as the US. Rising beef costs, higher wages, volatile energy prices, and looming trade disruptions were expected to push fast food prices permanently higher. Wall Street modeled it that way. Corporate forecasts assumed it. Even competitors prepared for it. But Canada took a different route. On January 13, 2026, McDonald's Canada confirmed a nationwide price freeze across core menu items. Small coffee, locked at $1 for at least 12 months. Value meals standardized at $5. Breakfast bundles launched simultaneously to reinforce daily routines. No regional variation, no fine print. Immediate implementation across more than 1,400 locations nationwide. To American executives watching from Chicago and New York, this looked impossible. Inflation hasn't vanished, supply chains are still strained, commodity prices are still volatile. Yet Canada stabilized prices anyway. The reason matters because this wasn't generosity, it was strategy. Between 2024 and 2026, fast food pricing in the US crossed a psychological threshold. Combo meals exceeded $10. Limited time offers triggered backlash instead of excitement. Consumers didn't just complain, they changed behavior. Traffic declined. Frequency dropped. Value perception collapsed. In Canada, the same warning signs appeared earlier, and Canadian leadership acted before the damage became irreversible. McDonald's Canada operates under a different pressure system. Canadian consumers don't respond gradually to price escalation. They disengage quickly. Loyalty isn't assumed, it's renewed weekly. And when value erodes, customers don't protest, they disappear. That difference forced a decision. Rather than defend margins quarter by quarter, McDonald's Canada chose to defend habits. Coffee routines, breakfast stops, weekly visits. Once those are lost, they don't come back easily. So the company treated price stability as infrastructure, not promotion. The scale made it possible. McDonald's Canada sources over 80% of its ingredients domestically. Beef contracts span decades. Potato suppliers are locked into multi-year volume agreements. Distribution networks were built for redundancy, not just efficiency. These relationships weren't created for inflation crises. They were built long before them. That's why the freeze could be nationwide, not selective. Coffee became the anchor. Canadians consume more coffee per capita than almost any other country. It's emotional, habitual, non-negotiable. By freezing the price of the most routine purchase, McDonald's Canada froze perception itself. Customers stopped checking prices. They trusted the board. The US couldn't replicate this even if it wanted to. American operations face fragmented suppliers, shorter contracts, higher logistics exposure, and unpredictable tariff pressure. When costs rise, prices move. There's no buffer, no patience, no margin for delay. Trump-era trade volatility amplified this gap. American chains were forced into constant repricing. Canadian chains absorbed shocks through structure. One adjusted prices, the other adjusted expectations. Competitors reacted instantly. Tim Hortons reinforced value bundles. Wendy's Canada expanded fixed-price combos. Burger King followed with limited freezes of its own. The market shifted together. This is where Canada quietly changed the game. Once an entire sector stabilizes pricing, inflation pressure loses momentum. Consumers stop bracing. Demand steadies, volume rises, cost per unit falls. The system feeds itself. America, stuck in price churn, couldn't trigger that cycle. The numbers tell the story. Canadian fast food traffic declined less than 2% year over year. U.S. traffic dropped closer to 7%. Average check size rose in America, but visits fell. In Canada, visit frequency stabilized even as margins tightened. One market chased revenue. The other protected volume. Executives in the U.S. publicly admitted the problem. Value perception was broken. Rebuilding it would take years. In Canada, it never broke. The freeze wasn't short-term relief, it was a declaration. Prices would not become the adjustment mechanism. Efficiency would. Supplier leverage would. Volume would. That's why the commitment runs a full year minimum, crossing commodity cycles, election cycles, and trade uncertainty. It forces competitors into a dilemma: match prices and compress margins, or hold prices and lose share. Either outcome benefits the market leader. Canadian consumers noticed. Social response was immediate. Not excitement, relief. That matters. Relief signals trust. Trust restores routine. Routine restores dominance. And once dominance is restored, pricing power returns later. Quietly, selectively, without backlash. That's the endgame. America can't copy this because it waited too long. Once prices cross psychological thresholds, freezing them doesn't restore trust. It highlights the damage. Canada froze before trust collapsed. This wasn't about fast food. It was about economic insulation. Canada turned fast food into an inflation hedge. America turned it into an inflation amplifier. The difference wasn't leadership personality, it was market discipline. Canadian consumers enforce value. American consumers absorb increases longer. Corporations adapt accordingly. While Washington debates tariffs and companies chase quarterly earnings, Canadian subsidiaries built long-term positioning. And when inflation peaked, they didn't panic. They executed. Breaking tonight, this wasn't a price freeze. It was a system reveal. Canada proved that inflation doesn't force outcomes. Structures do, habits do, timing does. And while America watches, Canada quietly locked in another year of loyalty. One coffee, one breakfast, one routine at a time.